Did the market just get its jugular cut and then we're about to bleed out? Or are we just having a pullback that we kind of expected because of the mass amounts of euphoria? Let's look at where we're going next in this video. So let's start with Bitcoin. Bitcoin, I talked about many, actually, not just Bitcoin, but many coins last time about, looked like they're a little bit overinflated and then we should be moving some coins around, right? This video, what we're seeing here is that Bitcoin has to hold this key level right around 66.9, right? And we kind of did, we bounced off that, but that doesn't mean that we're just gonna go straight back up. And the reason why I'm saying that is because yesterday, the ETFs actually sold off $200 million worth of Bitcoin. Now the day before and the day before that, they bought $1 billion plus, I think 1.7 billion between the last 2 days, which was the craziest days they've ever had. And it really, those last 2 days, if we really look at them on the chart, it did not reflect at all. So there must have been some OTCs going on or something along that line, but there obviously is some exchange of value going on. Now, what does that mean? Does that mean that people have exhausted their thirst for Bitcoin? Or does it mean that people are likely going to come and say, you know what, it came down now, I get a good opportunity to buy off this level. We were just at 73, now we were at 69, it's a $4,000 dip, I'm gonna buy it. Or are they going to be smart like Coach has been trying to help you out with and saying, we're likely going to come down a little bit lower. I think a really good level for this would be around $64,000. Now, obviously it's a $10,000 dip, but guys, $10,000 dips when you're at 74 to 64 is really not that much as like when we had a $10,000 dip when we were at 18,000 down to 8. So it's everything is relative, right? Now, a lot of people said to me, Coach, it's really, really hard for me to see that this level 64 would come. But remember, you have to suspend your disbelief and look at the chart and actually see what it shows you. Likely we have this small support at 67, but I'm thinking 64. And actually, as I was talking to you last time, we have a flat Kijun or a flat-ish Kijun quite far away from the price. And I was talking about that at, I think around 72, that we would have like a $16,000 dip to go back to the Kijun and bounce that. And we saw that with some coins like Osaka, we saw that with coins, many different coins to be honest, and those Kijun bounces are very, very bullish. Can I just give you guys a quick overview of what a Kijun bounce looked like last cycle? Because I think it's really good to understand that these things happen many, many times in a cycle. And I'll give you really good examples right here. So we had this huge run up way back in the day, last cycle. And we got all the way up to the top and we came down and retested the Kijun right here. We also retested it here and then we broke down. So in last cycle, we didn't test it as many times as in the past, but I'll just give you some perspective. 2 cycles ago, we had a lot of examples of taps off the Kijun, even fake outs to go below the cloud. But as you saw, we got really, really high up in May of 2017 and it pulled it back to the Kijun, right? We're seeing like that also happened way back in September 2017, pulled it back to Kijun, actually faked people out and then bounced. And kind of what we had recently where I was saying, oh, things kind of look bad on Bitcoin before we had this big run up. They had that same type of fake out and the same exact level, the 100 EMA held, and then it went into the cloud and then it popped up and then we ripped high, right? So if we're at the same time as November 2017, it also tapped there. So the Kijun taps a lot. And here, even at the top of that cycle, we came down, we tapped it once, we tapped it twice, tapped it 3 times, then it turned into resistance and we tapped it and we started going lower, tap, 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 down, right? So we also saw that in this last cycle in 2020, right? So we had the March dump off in 2020 right here. Then we started to get really bullish, right? And so if we go here and we just have a quick look, you can see that we got that same fake out 100 EMA holding in the same part of the cycle as last time. And then we started to rip above. And every time we got really far away from the Kijun, like here, it would pull it back down. Now, it doesn't have to go all the way to it, but it pulls it down more to an equilibrium level where there's buyers and sellers are meeting. And then you saw it happen again a little bit more as it pulled it down, and that Tenkin and that 21 EMA were the holding points for it again. And then it started to go higher. But what you could see is it stayed closer to the Kijun for longer. And then when it went really flat, when we were really high up, which is kind of like where we are right now, where it went really high up, way above, and then it flattened out. When it flattened out, it pulled it back down, bounced, and then we went higher. Then we kept going higher, and then it came back down again because we got too far away from it, and then it tapped it again, right? So the Kijun is a really key level for every single chart for Bitcoin and ETH and every other chart that I trade on. And Kijun bounces in a bull market are very, very important to look for. All right, so now we're looking at similar chart, right, in the future right now. And the live chart shows me that we've gone really far away from the Kijun. And so what I think is likely to happen is that we would come back down to the $60,000 level, potentially. So what we're seeing here is we have a hammer at the top of the chart, right? And what else we're seeing is that we have this big bearish engulfing, not even really a bearish engulfing candle, but just a really big bearish candle, right? And that's not done yet, right? Like today has many hours left from when we're filming this video. And so this could change very quickly and turn into a gigantic bullish candle and go all the way back up. We don't know that. But what I can tell you here is if you haven't taken any profit, it's never a bad time to take profit, as I remind you from the last video. It's likely, just like I drew in the zones last video, that we come into a zone again. And I'm gonna show you that zone right here. So the zone would be somewhere in here. So anywhere between 64,000 and 56,000 would be an area I'd like, which right in between those zones is $60,000. Now, I know that seems kind of far away, but at 68 for us to go 8K down, it would not be something that surprises me that much, especially after how fast and how hard we've gone up. And we already have, our halving coming up on the 18th of April, and we're basically the 15th of March. So we only have a month left before halving. So it could cool off, go sideways, because we've had that 3-4 weeks I talked about. Actually, we had 5-6 weeks of Bitcoin moving up. We could cool off, go sideways, and come back up. The only thing is this differentiating factor. And I want to be really honest with you here, that there's things that I don't know because this has never happened before. We've never had an ETF. And ETF's obviously making Bitcoin in the market act and react differently. So because of that, I can't tell you with as much certainty as I would before what's going to happen next. But I do think that if they did let up on the ETF buys, that it's likely we could come back down and retest that 60K zone. Now, if you're someone who is waiting, this is a good opportunity. Don't be fearful of that. Go and look at that and lick your lips and go, yeah, I'm about to get it. You know what I mean? That's exactly where we're at in the cycle. A few days ago, I talked about how this is a bearish movement, right? Right over here, we bearish tapped that $40 range on AR. And I said I was selling at 44 and I sold a little bit more at 45. And where we're at right now is $34, right? So I've already made a bunch of extra AR if I want to buy it. And it's almost at the zone, right? This is the plan that you have to do. Like you failed to plan, you plan to fail. Well, I'm planning to buy AR anywhere between $30 and $26. And whatever I sold at $44 and $45, I'm going to rebuy that $200,000 of tokens. But at this price, the same amount of tokens, I'll probably buy 150 because I'm paying a lot less money. Just to give perspective here, if I'm paying, let's say, a discount of 35%, I can buy the exact same amount of tokens I had before, keep a little extra cash, and then put that cash into some other projects that I have, right? Or I can invest that into a private sale. So it gives me a little bit more with less, right? And that's kind of the way you want to do it if you're kind of compounding or accumulating, knowing that they are likely will go much higher this cycle because we haven't even had halving yet. And alts haven't really had alt season yet, even though it feels kind of like they have. FET is another great example. So that hasn't moved down as much, right? But we're still looking at a dollar, between $2 and $1.85. That's what we're looking for on FET, right? And what about Agix? Agix is already starting to come down, right? So we're talking about 3 days ago on Tuesday, it was $1.23. And today it's $1.15. Now it doesn't seem like a lot, right? From $1.23 to $1.18, but we're still already down, let's say about 8%, right? Now, if we go all the way back to the zone, we're gonna be able to buy more at a cheaper price. And so this is all you have to do. It's much more simple than you think. You would literally put an order somewhere around $1, an order somewhere around 90 cents, and then an order off the Kijun at 87, knowing that likely it will bounce the Kijun if it gets to that low. Or if you're someone like myself who doesn't need to dollar cost in, where I've already taken profit and I have a bunch of bags, I can just wait for that Kijun bounce, which likely will come because we got far away from it, it flattened out, and generally likes to pull it down the price. So just know that's how you win when you're trading. And then when we look at other projects like AVAX, they got a little bit far away from the Kijun too, so it very likely could come back down. What about DOT? DOT's same, right? So everything, we have the bearish engulfing candle, a huge one, that's likely they will come back down to $1.20, right? When we look at Solana, Solana, right? It's gone ape, right? It's gone crazy. So what we're seeing with Solana is a shooting star right here. Now, is that at resistance? Not really. It could be technically a little bit of a resistance level. So yeah, maybe Solana is at a resistance level right now. We are far away from the keygen. So if you're someone who's like, I haven't bought Solana, I don't want to buy it now because everything's kind of going down a bit, you go into the zone, you go, all right, well, good areas to buy would be around 144, 140, and $132. These are areas that I would be looking to scoop more Solana if I am been selling on the way up, right? And right, if you look at it just from this perspective, let's say you sold $1.70, that's a 20% discount. Let's say you sold 1,000 tokens and we'll just call it $1,000 to make it simple, right? And now I can buy the same $1,000 of tokens for 20% cheaper. I can spend $800 for that same amount of tokens. And that's all you have to do. Now, BNB has gone on an absolute moon mission, went to the real area that I would call resistance, and now it's kind of broke down a bit. Now, BNB, great opportunity to buy would be between the Tenkin and the Kijin. So it's a very small zone. It's anywhere between $495 and $458. This would be where I would want to bid if I am not in BNB and I know that it will go higher this cycle. I remember, I'm looking for BNB to hit $1,700, $1,800 a cycle at the top, and it could go even higher than that, but I'm very conservative with my estimations, right? That's where we're at in the cycle right now. And I'm not going to go and talk to your face off. I know you guys see the weekend. I would just say that if you're seeing charts like this and you're a trader like myself, you start thinking, okay, well, hold up a bit, take a little bit of profit while I was talking about it before, right? And then go, I'm gonna buy in these zones. If you're someone who didn't take profit and you feel like you missed out on those opportunities and or you just don't want to touch it because you know it'll go higher in the cycle, do nothing. And if you have a spare change on the side that you've taken profit from before and you're like, oh, I don't know what to do with it, I have a couple $100,000 there, look for the projects like this one. BNB is a great example where if it drops down, and we're talking, it's not going to drop down a little bit, it will be dropping down from where it's at there around 25%. So 25, 28%, I would be looking, okay, when it goes down that low, I'm going to buy around that level, right? And if you're really, really trying to look at it, you're looking at that 50% retrace level, which we talk about in the Fibonacci, the 50% retrace from the top to back down to our starting point. So my area of caution right now would be that, yes, we could definitely bounce from right here because things have been going like that a lot in the cycle, but we also need to have pullbacks. And when there's a pullback, we should be very confident and very careful that those things are going to happen and they're very healthy for the chart. We had them happen like on BNB and everything else that went to the Kijinsen on Tuesday of last week. So it's very likely that we would have something like that potentially happen again because most of these coins like BNB was at $350 and it went to $640, right? That's a lot of capital that went into the markets. It's likely people are going to take some profit, go back into cash, wait for these things to come back down to equilibrium, which is our Kijins, right? And then likely after that, we will then buy and the price will bounce and start to go higher. This is like one of the most common things to happen in a bull market. So keep your eyes out for that. And if you're looking to get positioned, plan that right now. I'm giving you guys the roadmap of what you need to do. And if you have the Ali Ichimoku, which is this indicator, you just go in here and Ali Ichimoku cloud, right? If you get that exact one, you can change, mine will look a little bit different because I changed the colors, but you'll have the exact same thing that I'm looking at if you change the colors to the same as mine. You can do that while watching my video, and that would help you see the things that I'm talking about constantly over and over again. Because remember, trading is a repetitive thing that you do over and over again. So make sure that if you learn the things that I keep talking about over and over again, you'll start to understand what to look for, and then you'll be a little bit more confident to do something about it instead of just go, yeah, coach is right a lot, right? I want you guys to be able to benefit from these things, and that's how you can do it. So I'll leave you there. I hope you guys have an amazing weekend. Let's see how the weekend does and how Friday when the US Open does for us this week, because Fridays are generally a very big liquidity day, and either they will push us further down or they'll push us back up. This is something we won't know because of the ETF, but I do believe that we're gonna have a little bit of a pullback because it's healthy for the market, and the big players are gonna wanna squeeze all the people that are too heavily long right now. And make sure to come tomorrow for when I share my dirty degenerate picks.